Hello, and welcome to Pro Trader Strategies Market Commentary for Tuesday, May the 9th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data today. Across the pond, really almost nothing at all. Here in the United States, we got NFIB, which is the National Federation of Independent Businesses. It's a small business index. See how well they are doing. Came right in line with expectations at 104.5, was expected to be 104. We also got the wholesale inventories number here in the United States. Came in a little bit higher than expected at 0.2%, was expected to be a drawdown of 0.1%. So increased inventories means that the businesses aren't really moving product, but it's a little bit wanky in the sense that they might be gearing up for future sales. So they might be ramping up inventories ahead of that. So that one's a little bit odd, if you will. And then we got the economic optimism came in at 51.3, was expected to be 52.3, so just slightly lower than expected there. And we have Kaplan speaking later on this evening, which is a Fed governor, FOMC Fed governor. Now, on to the overall markets. Crude oil continuing its slide. Oh, by the way, sorry about yesterday. I had a bit of an issue over here at the homestead, so we had to clean that up, and wasn't able to get to market commentary yesterday until it was pretty much after the close. Anyway, so crude oil down on the day, continuing its slide, was looking like it was going to gather a bit more momentum after the big sell-off down to the value area low. Today, starting to give up a little bit of ground. I thought we'd see a little bit more push higher, but today not really showing up and back below $46 a barrel. And then on to gold futures. Gold futures having a rough couple of days. Anybody who thought that this was really looking like a bottom, which I actually thought it was kind of starting to build a little bit of a base here, might revisit the point of control, which is where the most time and volume's been spent. Does not look like that's going to be happening. It's almost even looking like we are going to get that. I think they call it a golden cross when these two cross, but that is a bearish, continuing the bearish. When we get it across to the upside, that's more bullish. Not going to happen. We're starting to separate away from that. So gold continuing to slump. Something interesting though, you would think that if there was a flight to quality or flight out of some of these products that want to get away from dollar denomination. We have Bitcoin chart here. It was up over $150 today. At one point, it's just over 100 now. But if you look at it on a 6 months chart, you can see that it's almost doubled, or it's over doubled in value in the last 6 months. So Bitcoin really driving higher as people are flying out of different types of commodities and things of that nature and putting their money in Bitcoin. It's a little bit bizarre to me that you would see, especially Bitcoin rallying as much as it is, and we're seeing gold really kind of fall off in that same time. So a little bit bizarre, but people throwing their money towards Bitcoins, despite the fact that there's not a whole lot of retailers that are really accepting that currency. We got bonds down about a half a point on the day right now. Got below this 50-day moving average, which is pretty bearish. Although I don't think we will see it break out of this range below 145 and above 155. So I think it's going to kind of trend sideways, as I've spoken before. Fed has really shown that they aren't going to move interest rates at any more of like a 25 basis point clip, and I think that that's already priced into the overall bond market. So, and we're not really seeing a whole lot of economic data to really change that mindset right now. We've got the Dow Jones down slightly on the day. It was higher on the day earlier this morning, giving up a little bit of ground, but we're still stuck in this tight range in the broader markets for the most part, aside from NASDAQ, as people continue to pile into technology or technology-related companies, with the NASDAQ really driving the way to the upside, up 21 points, which is a bit strange with the Dow down on the day. And the E-mini S&Ps, for all intents and purposes, unchanged. So we've got a real mixed bag here, with bonds being down, gold being down, crude being down, NASDAQ really rallying hard, and the Dow Jones down, E-mini S&Ps unchanged. We did look like we were breaking out of this little range yesterday, but ended up settling back down in it. If we look at the chart on the 30-minute chart, 20-day breakdown on the E-mini S&Ps, you can see we kind of have broken out of that bit of a trend that we were seeing, just trading sideways, and are kind of above that. That's going to really act as support now going forward. So E-mini S&P is kind of looking a little bit more bullish going forward right now. They're just kind of trending slowly, starting to break out or break away and trending higher, but albeit very slowly. And then under the couple of things that I've done, Tesla yesterday looked like it was kind of going to be, I thought, coming back off as it covered that gap, but today pushing higher, along with, it's in the NASDAQ, so it's going to help be, it's helping the NASDAQ for one, being up 13 points on the day. So I actually got into a trade in Tesla, bullish trade, and went into the June, a little bit further dated because it has low implied volatility percent, as you can see, and went into the June, bought the 305 calls and then sold the 330 calls. So that's about 25 ticks wide, or $25 wide. So in that I paid $12.40 for that. So right in line with my rules for creating a long call spread. You can check that out at protraderstrategies.com. So following in line with that, the basic risk reward on this is I'm risking that for every one lot, $1,240, and to gain on the upside would be $1,260. So it's about a 50-50 shot on that, which is basically the same probabilities, a little bit better on my side than just going out and buying the stock. So that's why I choose to do this type of strategy in a longer dated security. If you go out and buy a stock, it's 50-50. With this, I'm getting slightly better odds than that, and using a lot less margin. On to Goldman Sachs. Goldman Sachs, just to kind of keep my portfolio balanced with deltas. I got long deltas in Tesla, decided to get short deltas in Goldman Sachs. Actually, I put on the Goldman Sachs first and then added the longer deltas just to kind of split that evenly. And with Goldman, same thing, went into the, in the Tesla, I did the July. I said June. I did the July 305, 330 call spread. And in Goldman Sachs, I did the July also, and bought the $2.40 put, or $240 strike in the puts, and then sold the 210 puts in the July, and paid $14.65 for that. So again, right in line with that, risking $1,465 for every one lot, and the opportunity to gain just over $15 and say 35 cents for my max profit there. Looking for Goldman to pull back. Whether or not they're going to pull back all the way down to the 210 level, I don't know, but I was looking at this as, if it takes a little while, it could come down to look for the support level on the 200-day moving average. So that's also right in line with this high volume node. So if we break down much below this, I think it's going to want to go down there and test that there. All right, so that's all I got for you guys today. Sorry about missing you yesterday, but if you can't take that, take it easy.